Welcome to yes.
अरुण
So
जी
good
वो
morning everyone
स्क्रीन
and
शेयरिंग अलाउ करिएगा।
oh sorry मैंने 1 मिनट कर देता हूँ yes yes. So good morning everyone and welcome to today's SMS. So basically this budget we are lucky we are only discussing in all the forums 5 simple changes that have come. But as we all know that SMS is a forum where we go even deeper into simple things. So that's why me and RPG, we have thought that instead of skipping the sessions, let's have the discussion because there are a lot of things to discuss, which will take us maybe forward in the discussions for budget analysis that we're going to do in the other sessions for the other forums and also for our practical purposes. So, RPG, over to you. I think we'll start because I think we'll start with the discount thing, post sale discount, बिकॉज द लिटिगेशन अराउंड एग्रीमेंट शादी में भी बोलते हैं कि शादी के पहले आपको वो रजिस्ट्री मैरिज करना पड़ेगा तब जाके अभी शादी वैलिड होता है तो आई थिंक दैट वाज द थिंग दैट वाज देयर इन द पोस्ट सप्लाई डिस्काउंट आल्सो अंडर सेक्शन 15(3)(b). So fortunately there was a lot of litigation for the agreement being oral, written, pre, post, lot of things. आप पहले किया था बाद में किया था तो finally census prevailed and the amendment has come in. So today we'll discuss as to how the removal of the amendment is going to benefit us, what would be the impact of it, and whether it's retrospective, prospective. All the discussions we'll be having in the next few moments. So Arpit ji, over to you.
गुड मॉर्निंग अरुण जी।
Good morning. Yes.
एक
हाँ. And as we have shared, so RPG will be leading the discussion, but I would like to have the members as well, always. We would like to have the views of the members. Yeah. RPG, आपका अभी हाँ स्क्रीन विजिबल है.
तो गुड मॉर्निंग एवरीवन। माय वॉइस इज इकोइंग जस्ट अ मिनट।
आपने शायद 2 डिवाइस से ज्वाइन किया होगा.
हाँ मैंने उसको मैंने
अच्छा मैं कर देता हूँ, मैं दूसरा वाला म्यूट करता हूँ. हाँ अभी ठीक.
हेलो हेलो नहीं अभी भी आ रहा है। हेलो
अभी देखिए. अभी देखिए. नहीं अब आपकी आवाज हमारे तक आ रही है लेकिन
मेरे को एक हो रही है।
अजी को हो रही है. यस. हाँ आप म्यूट पे हो अर्पित जी, आप म्यूट पे हो.
हाँ जी। So good morning everyone and as Arup ji said that we would be initiating the discussion because almost all of us who have joined the session today for SMS would have taken a session somewhere or the other on the budget aspect. So we would not be going into the regular aspect that what this budget is amending. But what is the nitty-gritties of such amendment? We would be discussing more on that aspect. And starting with section 15, subsection 3 and B. So if we go through section 15.3, so as we all know that value of supply has been provided under section 15 and the exclusion from value of supply has been provided under 15.3A and B, and 15.3A provides for discount being given on the invoice itself and to be excluded from the value of supply. 15.3B was an important section and we had a discussion in detail on 15.3b when we had a discussion on section 15 that what is the exact scope of 15.3b. So if we go through section 15.3b, the old provision, the new provision. So the old provision, there were three important conditions which were there. The first should be that there should be an agreement entered into at or before the time of such supply. So the existence of agreement prior to or at the time of supply was a mandatory requirement. Second, it should be specifically linked to invoices. That is, a discount which is being given should be specifically linked to the invoices, and the agreement should be providing specific method for quantification of the amount and how the discount would be quantified. As we all know that initially there was a double AR in case of Ultratech cement. wherein they had said that a discount would be agreed as per mutual understanding later on. So that was held to be invalid, and subsequently, the condition, as we have all understood, is that the discount agreement should have specifically quantified that how the discount would be arrived at. And the third condition was the ITC as is attributable to the discount on the basis of document issued by the supplier has been reversed by the recipient of the supply. So three conditions: agreement, linking of relevant invoices, and ITC has been reversed. But if we go through section 15.3b, which is the new provision now, which would be substituting, it says that a credit note has the first condition is now that a credit note has been issued by the supplier. The one of the most striking aspect for me, and which further, what we can say, substantiate our discussion when we had section 15.3 discussion, that now 15.3b uses the term a credit note has been issued. If we go through the old provision, it was only stating that the ITC as is attributable to discount on the basis of document issued by the supplier. So it was not referring to the credit note, it was referring only to the document issued by the supplier. And although in a regular practice, what we were doing, we were issuing the credit note, we were uploading in GSTR1, that was being reflected in 2A, and the recipient was reversing the ITC. But no specific mention of credit note was there. It was a document issued by the supplier, which could have any name, and but which was not specifically linked to section 34. So the first thing is that the reference has been made to the credit note. Second is the same condition, ITC as is attributable to such discount has been reversed by the recipient of supply. That was also there. And the third part is that in accordance with the provisions of section 34. So the reference to provision of section 34, now it has been specifically incorporated in 15.3b, which was not there earlier. So now 15.3b itself is referring to credit note, and along with that provisions of section 34. Previously, neither section 34 was referred nor credit note was referred. The second aspect, if we read through section 34, because they have to be read together now. So section 34 now specifically provide, which I also highlighted in red, that where a discount referred to in clause B of subsection 3 of section 15 is given, the supplier may issue a credit note containing such particulars as may be prescribed. So now section 34 is also referring to section 15.3b. So therefore, on a combined reading of 15.3b and section 34, both amended and pre-amended, now whereas in the first case reference was only to document, no reference to section 34, neither section 34 referred to section 15. Now all these three conditions are there. Document has been replaced by credit note. Reference to no reference to section 34 has been replaced by reference to section 34, and no reference to section 15 under section 34 has been made good by referring to the provision section 15.3b. This is the amendment. Now, as we all know, that the foundation for making the amendment was laid down in 56th GST Council meeting. And if we go through the recommendation of the GST Council meeting for amendment to section 15, it provided that to omit section 15.3b1 of CGST Act 2017, thereby omitting the requirement of establishing the discount in terms of an agreement entered into before at the time of such supply, and specifically linking of the same with the relevant invoices. So the entire focus for amending 15.3b1 was to omit the requirement of establishing the discount in terms of an agreement, and secondly, to linking it with the relevant invoices. So now the emphasis was to have omission of these two things for the amendment to section 15. And when we go through relevant recommendation of 56 GST Council meeting for section 34. It specifically provided to amend section 15(3)(b) of CGST Act to provide that discount should be granted through a credit note under section 34 of CGST Act. So the first intention was that 15(3)(b) should now be linked to section 34 and to correspondingly amend section 34 to include a reference of 15(3)(b) so as to provide for a reversal of ITC by the recipient in case post-sale discount is given and value of supply is reduced through GST credit notes. So this was the entire background of why section 15 was amended and why section 34 was amended. So now the larger question for these two amendments is, which I would like to have a discussion with all the members and initiate the discussion is, the first is replacement of document issued by the supplier with credit note. Second is no reference under section 15 for section 34 now to reference to section 34. Third is under section 34 no reference to section 15(3)(b), now reference to section 15(3)(b). So the first part is whether at all prior to this amendment the conditions which have been provided under section 34, whether at all they would apply to the existing provision, which is the pre-amended provision. So when we talk about the conditions, first the time limit to issue the credit note, and second is the reporting of the credit note in the return. Because we have faced many litigations around this, wherein it has been said that you have not issued the credit note within the prescribed time limit for discount and you have not reported in GSTR 3B within the prescribed time limit. Therefore, you are not entitled to have the benefit. So this is the first question. And the second aspect, which we will discuss along with this first aspect, is now reference to the agreement has been completely omitted. Whether the agreement is there or not, that also is irrelevant. What we thought at the time of 56 GST Council meeting is that there would be a condition of agreement being in place, whether it is prior to the supply, at the time of supply, or after the supply, but before giving in the discount, there should have been an agreement. But now the reference and the relevance and the condition of agreement has been removed. So can we say now that supposedly, let's take an example, that A is a chartered accountant and he issues an invoice to B. And A issues an invoice for say 1 lakh rupees and charges tax at the rate of 18%. B, the recipient comes and say, no, I would only pay 80,000 rupees and you have to issue a discount. You have to issue a credit note for such discount. Now, A issues the credit note. Prior to this amendment, what we were doing is that since there was no pre-existing agreement, since there was no quantification of the discount, we were issuing a financial credit note. Thereby, whatever tax has been reflected on the invoice, that was being paid to the government. And the government was saying, see, section 15(1) says that if two persons are unrelated person and price is the sole value, price is the sole consideration. And since there is no agreement prior to or at the time of supply, therefore you cannot reduce your value of supply. Now, post this amendment, whenever Finance Bill 2020, this amendment is notified. Now, there is no requirement of any agreement. The only condition which 15(3)(b) says that if discount has been given, then a credit note should have been issued. The recipient is required to reverse the ITC, and the credit note should be issued and the ITC should be reversed in accordance with the provisions of section 34. That is the time limit and the reporting of the return. So as a supplier, if now post this amendment, whenever it becomes effective, I issue a credit note of say 20,000 in the example given by me for an amount which was not agreed at any point of time that this discount was given, can I issue a credit note for 20,000? And if yes, Now, post this amendment, whether GST has now become tax on actual amount which is being received by the supplier. Previously, we used to say that tax has to be paid on the transaction value, and even if you have not received an amount, I would not say that this would cover a situation wherein no amount has been received, but it would can this amendment cover a situation wherein partial amount has been received and both supplier and recipient now agree to a discount which has been agreed post the supply without any agreement being issued. So now can whether GST would be reduced to a situation wherein irrespective whatever amount for invoice has been issued, the tax has to be paid on the amount received, provided a supplier issues a credit note, the recipient reverses the ITC, and the supplier fulfills the condition of Section 34. So these are the two questions which I would like to put before the House for their views, that what is the actual impact when we discuss about Section 15. Whether this amendment would be prospective or retrospective, that we will discuss once we discuss Section 13(8)(b).
Yes, so the views of the House on this.
Sir, I think credit note is a must now. Without
Yes,
that,
credit note is a must.
yeah, without that, there is no question of, and that condition of earlier agreement also has gone. So, which means
Yes.
it's a better proposition as far as the such a transaction is concerned.
So now can we say that the tax is actually to be paid on the only on the amount received?
Yes.
In the example
naturally.
that I have given.
Yeah, naturally. No, automatically it reduces the liability now when you issue a credit note.
Yes. So irrespective of the fact that whatever was the initial amount of value of supply for which invoice I have issued, now supposedly I only receive 80,000 rupees and both me and the recipient agrees for a discount of 20,000 rupees. So now effectively now I have to pay tax on 80,000 rupees. There is no requirement for paying on 20,000. And since the payment has been received short, so therefore it is allowed as a deduction from value of supply.
Exactly. And your financial credit note is not required then.
Yes, yes, that is not required.
Sir, one more aspect is with this, they also said that discount has been reversed by the recipient of supply. So even that was also having an issue prior to this. What else? Like they issued the certificate also. They issued the circular saying that the recipient should give the circular, all that. So now with this amendment also, I think that credit note itself is a document to substantiate that it is relating to that discount, and the condition also that the recipient has reversed the discount. So earlier there was a like requirement, all that will there. I think IMS
No, madam.
will
No, madam, that has
substantiate
actually
that.
been actually strengthened. No, through 34 amendment. That unless and until the thing is reversed, then the credit note will not be allowed. So that has been strengthened. And as you rightly said, because now IMS is in place, so that certificate thing is gone of circular 212.
Yeah.
So that is, but RPJ was thinking about another thing, like abhi tak kya ho raha tha, we are having difficulties regarding proving of deficiency in service. So now whether this will become another the route.
Yes, now the entire provision of Section 34 of proving the deficiency and non-receipt and whatever conditions were there. Now they take a backseat, and this would be the front argument that I have issued the credit note irrespective of whatever was the reason. Since I have issued the credit note and the recipient has reversed the ITC and I have reported in one and he is accepted in IMS, therefore I am eligible to reduce the value of supply.
Yeah, I think it should be the actually as per the framework of GST, that should have been the case, because as long as government is not out of tax, it should not be complaining. Because even if for deficiency of service, मैंने दे दिया credit note, whether it's a post supply क्या है, deficiency है कि नहीं है, I think this is a welcome change. Any other views from the house or any other inputs that you have got questions from in different forums? Yeah.
And what would be the impact of this amendment now for the period prior to this amendment? Now, credit note can be issued till any time and it can be reported in any 3B. There is no restriction of any time limit. of reporting and issuing.
That linkage of invoice, which is now there in the, when you do the credit note, it asks for the invoice number. No, not that also has to be removed. No, they have to change the
No,
form.
that is already removed from 1st February 2019.
Okay.
That linkage is gone from 1st February 2019. But
Arupji, for 15.3b, that linkage is still there. Although the portal does not require.
yeah, portal
but
does not
that-
require. That's what I'm saying. So portal mein nahi lagega.
So what was the situation is that for 15.3b, the requirement of linkage was there, but for section 34, there was no requirement of linkage. Now, post this amendment, both for 15.3b and 34, there would be no requirement of linkage.
Sir,
So now discussing about the timeline, I think which Arpit you said. Yes, ma'am. Anupam, ma'am, yes.
Arup sir, you were saying like a deficiency of service, because that is also still there in 34. No, this is only one more
No,
fifth
that is
scenario
there, but
they have added in 34. Yeah.
yeah, that is
So
there.
how
But
this?
now I'll not say deficiency in service. I'll just say that I'm issuing a post supply discount. That's it. I'm giving a post supply discount. So now I don't have to fight that, that interior decorator. I had given the invoice of 10 lakhs and the customer is not approving the paint and the glass and false roof. And that's why he's deducted 50,000 rupees. So I'll simply say I've given a post supply discount, but that's it.
Ma'am, now what would happen is that once a supplier and recipient agrees for any reason to reduce, this credit note can be issued in 15.3b. Prior to that, there was an additional condition, not only both supplier and recipient to agree, but additionally it has to prove that it was on account of deficiency. So the department was always saying that what was the deficiency? You have to prove that deficiency. No, there was no deficiency. You are just reducing the value just because you want to pay lesser tax. So that was a condition. Now, in one of our case, as has been discussed in earlier SMS also, there were multiple cases around the country wherein the department was challenging that whether or not the agreement which has been entered between the supplier and the recipient, that was entered prior to or before at the time of supply. So in one of our case wherein a huge demand was created, we submitted the copy of the agreement. The department said that no, we would not agree because this is only on letterhead. This is not on stamp paper. This is backdated. You had not prepared it earlier. Now you are submitting it. So in that case, the existence of agreement, not the existence of agreement, but date of execution agreement was challenged. Although we referred to BSA that the burden of proof is on the department to challenge that it was to prove that it was entered on a backdated. But yes, there were multiple issues regarding the execution of date of execution of the agreement also.
Okay, sir. Okay.
So any other views from the house? Because we are attending sessions in different places, so maybe from different forums we're getting different questions. So we can place them here and have a discussion for the benefit of everybody. और अगर नहीं है तो फिर I think
Hello, sir. Does this mean hello?
हाँ sir हाँ.
Sir, does this mean now a credit note issuance is a mandatory for commercial credit note has no relevance?
No. See, when 15.3b refers to section 34, so therefore section 34 itself provides a specific time limit. Now, if I issue a time limit post that issue a credit note post that time limit, so it would not be a credit note under section 34. It would still be a financial credit note. So by way of this amendment, also both the options are still open. You can issue a taxable GST credit note, reducing the tax and value of supply, or you can issue a financial credit note. See, at many places, the supplier would still want to issue a financial credit note, and he would not like to reduce his tax liability. Supposedly, I am a supplier, and I have a huge ITC balance. Now I have made a supply to Arupji and issued the invoice. So my ITC, which was lying there, now stands encashed by way of payment from Arupji. Now supposedly there is a discount to be given by me to Arupji. So I would not be reducing my value of supply, because if I would reduce, again that tax would increase my ITC, and my credit would be my working capital would be blocked. So therefore, there would be a situation where when supplier and recipient would be agreeing to issue a GST credit note, and still there would be situation there wherein they might not. So both the options are still open even after this amendment.
Yeah, so Arpit is Sarvana Prabhu here.
Yes,
So
sir.
just want to put one question to the general audience also. So there's one interesting case of ours where we had an issue with the same credit note that is before all these amendments. So wherein there was a unilateral act of the customer. So wherein let's take the same 1,20,000 example. The invoice was raised for 1 lakh. There was no question at the time of raising invoice either from the customer or anybody else. So everything was done and dusted. Probably at the time of payment, there was some financial crisis, so on and so forth. Therefore, there were ultimately only 80,000 was paid, and 20,000 was in effect turned out to be a unilateral write-off, or we can say sort of a bad debt that was there. Now comes the question as to such unilateral write-offs or this one of the customer. Now does it, so earlier there was a question, I mean, it was only a financial credit note which was there, I mean, possible or when the GST credit note was raised or disputed because it doesn't fit into any of the parameters of 34(1). But now, as you are rightly pointing out, you'll have to see whether I can say that this 20,000 is now a discount, therefore it will fit into 34(1), and consequently, can I issue a GST credit note and therefore take benefit of this particular 20,000 write-off also is something that we'll have to really think about. So I probably would request the views also of the house on this.
So, Shravanji, your case was is a case wherein the prevalent provisions are there, and you want to we have to discuss what would be the scenario post this amendment, or whether post this
Correct.
amendment the previous
Totally.
in the previous
Yes,
transaction.
absolutely. Absolutely. Prospectively also and retrospectively for all pending cases. So which
Yes.
you said you'll take it up in the end, but
Yes,
if
yes,
it
yes,
permits
yes.
or even in the end we can discuss. But generally, suppose that happens now prospectively. So whether it would fit into 34(1). Suppose it happens right now or after this amendment is in
In
effect.
my opinion, it can be done
Yes,
prospectively.
exactly. So
Yes.
now unilateral write-off, now it gives me an opportunity at least, okay, now I'm not getting this money, might as well issue a GST credit note and I mean take benefit of the GST part, at least
But
saying
then
that
the
it is a discount.
recipient has to reverse the ITC.
That is there.
No, in any
Whether
case,
he
he has
would
to
do
know
it or
because Rule
not.
37. No, Arpitji, in any case, he has to do because his Rule 37 is there. So, in any case, he will be reversing. So, I think this will be a better
But
way of doing it.
supposedly, Arupji, he has not rejected it in he supposedly he has rejected in IMS.
Then it will become a difficulty.
Yes. So if
But
he has not
I think
rejected in
payment nahi
IMS,
karna. I think if he is not doing the payment, then yeah, I think he will not reject.
so if he is not rejecting, he has only accepted. So then we can take a deemed assumption that the ITC has been reversed, and if he has rejected it, then in such case the case a civil suit may be filed that you are since you have rejected, so you accept that this amount is to be paid.
Absolutely. So therefore, there
Yeah, that is
are these
payment.
questions that, of course, rise. So first is the prima facie eligibility under 34(1), and once the eligibility is there, subsequently the conditions of reversal of ITC and how far no IMS also becomes mandatory, or what is the impact of IMS on this. So probably these questions need to be answered. But again, yeah, of course they are there. But yeah, probably I can request the views of the house on this also. But prima facie, it seems as though now I might as well issue supposedly the other conditions satisfied. I might as well issue a GST credit note, calling it as a discount, and therefore try to fit myself under this 34(1) and get the benefit of this one also. But of course,
Yes.
yes. So the other things we'll have to. So unilateral acts, what I'm trying to probably ask the house is that now even unilateral acts as an act. I mean, there's earlier where it was disputed. Now it gives me an opportunity at least to take advantage of this GST credit note under 34(1). Whereas
And
earlier it
as
was a
long as
strict.
as
Yeah,
long
please
as
go.
the person accepts it in IMS, okay, so it no longer remains a unilateral act.
Correct. But if does acceptance or deemed acceptance or non-acceptance in IMS, how far mandatory or how far we can say that will have an impact is my next question also on this particular aspect.
So, Shravanji,
Now,
in my opinion, since the only mechanism available with the supplier is IMS, and the recipient is well within his power to accept or reject, and once he has not rejected it, then it is a deemed acceptance as per the whatever we can say advisory issued by the GSTN, which now holds the supreme as per law. And this is the only mechanism. So I would always say, and that's why, in my opinion, they remove the requirement of circle number 212 for credit note. So, in my opinion, and what every one of us would also be arguing, that once it has been accepted in IMS, so it means that the ITC has been reversed. Now, whether at all that person reclaims it or whatever he does in it in his return, to my opinion, to the extent I have received the communication, he has accepted it.
right. So, in your view, the rescinding of Circular 212 is now by default replaced with the IMS mechanism.
Yes, yes.
All right.
Sir, but still the time limit for issuance of credit note will apply, na?
Yes, yes.
6 months.
Ah.
Normally, bad debts happen after a year or two. So, in this case, if the time limit is gone, the option is also gone.
Yes, yes.
Okay.
Yeah. So my question was prima facie fitment under 34(1). Of course, the conditions, incidental conditions, we'll have to evaluate. But my question was the prima facie fitment under 34(1).
Yes. So, Aruji,
I think we should move to the next. Yes.
So, I would not be discussing section 54 because we have already discussed. Now, coming to section 13. Coming to section 13 and 13(8) of IGST Act, that is regarding intermediary. Because in my opinion, these two are the substantive amendments in GST, although yes, rest of the amendments are also important. But
Arpit, I would just like to share your interview that, the 54 year amendment लाया गया for provisional refund for the IDS also. That is because of GST 2.0.
Yes.
After GST 2.0, a lot of things have moved towards lower tax bracket, because of which now we are facing an issue of inverted duty structure. So that's why, because of the blocking of credit, I think representations were made, and so that's why they said that exports ka jo hai benefit will also give to IDS also. Only till that much.
Yes, and the instruction number 6/2025 dated 3rd October 2025 was issued. Even the amendment was not carried out, and amendment in Rule 91(2) was there. So now a corresponding amendment in GST Act is also proposed.
Yes.
Now coming to section 13, section 13(8), that is intermediary. And if I correctly remember, Shravanji himself had taken the session on intermediary, 2 or 3 sessions. That what is the scope of intermediary and how they have to be taxed. So now this provision of 13(8)(b) regarding the place of supply has been amended. And if we go through Finance Bill 2026, section number 141, it says in section 13 of IGST Act, section 8. So in section 141 of Finance Bill 2026, it is stated in section 13 of Integrated Tax, in subsection 8, clause B shall be omitted. So the most important part and the interesting part is the omission. Rest we all know that 13(8)(b), by such omission, 13(2), the recipient would now be the place of supply, and the RCM would be required. Now it would be import of services or export of services. That is a completely different thing. Now the two aspects which I would like to discuss when I discuss section 13(8) is, there was a similar amendment for section 13 subsection 3 in case of research and development services being carried out of a pharmaceutical sector. So initially there were many AARs and AARs that since the goods are required to be brought in India and only on those the activity would be carried out. Therefore, as per section 13(3), the place of supply would be the location wherein the goods are being brought and the work is being done. So even though I was carrying out a work of research and development for a recipient who was situated outside India, I was receiving a foreign currency. But since the place of supply as per section 13(3) was India, that is the location of the goods on which the R&D was being carried out. Therefore, I was not getting the benefit of export of service, and thereby a notification was issued on 30th of September 2019, 4/2019 integrated tax, wherein they said that for such research and development activities for pharmaceutical sector, the place of supply would be the location of recipient and not the location wherein the R&D activities are being carried out on the goods. Now, this matter went before the Honorable Karnataka High Court that whether this notification has a prospective impact or a retrospective impact. The department said that it is prospective in nature because the notification does not carry any reference to it being a retrospective impact. Although the assessee argued that it has to be a retrospective impact, and what Honorable Karnataka High Court said while holding it as a retrospective benefit, even though there was no mention of the notification being retrospective, it said that it is well settled that all amendments which are beneficial in nature, which are elucidatory and clarificatory, would operate retrospectively when they seek to clarify and elucidate certain existing facts and situations, and consequently having regard to the specific observation made in 37 GST Council meeting, whereby it was resolved to clarify the tax liability in GST liability in relation to foreign recipients of R&D services provided by Indian pharmaceutical companies. The impugned notification is clearly retrospective, being clarificatory and elucidatory in nature, and therefore the benefit was extended to the supplier, and it was treated as a retrospective. Now, keeping this in background, another issue which went before Honorable Delhi High Court, that whether what is the nature of this amendment which is proposed in 13(8)(b). So this judgment was given on 25th of September 2025, that is post GST 2.0 GST Council meeting, 56 GST Council meeting. And what Honorable Delhi High Court said, that thus intermediary services are no longer services for which the place of location of supplier would be deemed as the place of supply. Even for such services, the place of recipient of the services would be place of supply as per section 13(2) of the IGST Act. The confusion that was prevalent relating to intermediaries and the entitlement to claim benefits on the basis of export of services is eliminated. So what is the nature of this amendment? Honorable Delhi High Court said that this is a clarificatory amendment which seeks to eliminate the confusion which is there. So when we read both these judgments together and keep and link it with Dharmendra and Jani Bombay High Court, wherein Honorable High Court said that the levy of CGST and SGST is no longer valid. Although the provision is constitutionally valid, but the levy is not correct under CGST and SGST, and therefore no tax can be collected. So when we read through these three judgments, in my opinion, it can very well be argued that this is a retrospective amendment, being clarificatory in nature, being there to remove the confusion and giving a benefit to the taxpayer. Therefore, it is retrospective even for the cases which have been made by the department for the period 1st July 2017 till this amendment is notified. This is for the cases which have been made by the department. Now, coming to the case wherein the cases which have not been made by the department, but they are made subsequently, say this amendment is notified from say 1st of October 2026. Department issues a show cause notice in October 2026 for cases for the period say for 23-24. Now, can the notice be issued post this amendment for a period which is prior to this amendment? Again, we have to go to section 141, wherein it makes a reference to the section being omitted. So when we say about section being omitted, in my opinion, first of all, whether it is said as a repeal or a omission, it can never be treated that since the word omitted has been used, the amendment is retrospective. The amendment is still omission or repeal, they are same whenever they are. But the important aspect is when the section is being omitted, the 13(8)(b) provision is being omitted, there is no saving clause attached to it for the period when it was in effect. And as we all know that on Rule 9610, multiple high courts have given their judgment. Bombay High Court has given, Calcutta High Court has even given a stay. And there are multiple high courts, Gujarat High Court has also given. So there are multiple judgments for Rule 9610 that when in October 2024, Rule 9610 was omitted, there was no such saving clause there in the rule. Therefore, no fresh notice can be issued for the period even prior to the date on which this rule was omitted. So, the second aspect which I would like to put before the House is, can a notice now be issued? Supposedly, this amendment is effective from 1st of October 2026. Can a notice be issued for a period prior to this after 1st of October 2026, since there is no saving clause attached to 13.8b? So there are two issues. First, for the notices which have already been issued and the proceedings are pending, can it be said to be retrospective amendment? Second, for the notices which have not been issued and issued post the effective date of this amendment, so whether at all they can be issued, because there is no such saving clause in this provision. Yes, Aruji, and all the members.
Sir, first of all, sir, I'm Paul Tang from.
Yes, sir.
Yes,
Yes,
sir.
sir.
Yes, sir.
Sir, first of all, for this provision, they are not mentioned from which date it will come into force.
Yeah,
See, for
yes,
all
sir.
the thing from the date to be notified, everything is there. But for this provision, they are not mentioned from the date it to be notified or anything. There is a omission in this regard in the Finance Bill 2026, I think, sir.
Yes, sir. Yes, sir. Definitely. That was in my next slide. There is an omission regarding the effective date, and most probably they would correct it. This is by slip which they have made. Most probably they would correct it whenever Finance Act 2026 is notified.
But RPG is a correction required, because otherwise what will happen probably is an IGST enactment. So it comes into effect whenever the act is enacted, right? I mean, like, it's still there in section 1 that unless otherwise provided, as you are rightly pointing out here also, save as otherwise provided. Therefore,
Save as otherwise, so it has nowhere been provided.
correct, that's what. So otherwise it will automatically come into effect as far as the Finance Act 2026 whenever it is notified, right?
No, save as otherwise provided, matlab anything contrary which has been provided in the specific. See, at many places the amendment is retrospective. So therefore, even if the amendment is notified, it would be having a retrospective effect. So in my opinion, since they have made all these provisions to be effective on a specific date or from the date to be notified, 141 has been left, because other than that there are certain provisions in income tax which have not been mentioned, but they are having a specific date in the provision itself, that what it would be the relevant date. So in 141 there is no relevant date in the provision itself, nor in section 2 of the finance bill also.
So won't it come into effect whenever the Finance Act 2026 is notified?
No, in my opinion, they would be making a correction in this whenever they would be notifying Finance Act, and they should ideally put in this section 2. But let's keep it aside, because this is a slip of tongue and mistake in writing, I think. Or even if, say, it comes into effect whenever they are notified, the issue which is also there is whether this would be a retrospective amendment, or since there is no saving clause attached to it, whether at all new notices can be issued for proceeding which have not been initiated.
Yes.
Arpitji, I'll just 1 second. I'll have to leave because I'm taking the dais now. So Annapurna ma'am, I'll request you whenever the session is complete to give a vote of thanks to Arpitji.
nahi, koi
Okay. Thank you.
Okay, Aruji. So now the post is Annapurna ma'am. So we both would be initiating and carrying out the discussion for next 15 minutes.
RPG, I'm Yatish here.
Yes, sir.
If I can just pitch in. I understand that the entire background of discussion on this particular amendment is that it's a beneficial or a clarificatory, and that is where your questions are coming from. But just one small, I don't know whether this is going to affect a lot of people, but at least let me put this across. If we are all looking at from the Indian intermediary perspective, please also consider a foreign intermediary. Now, with the omission, this might qualify foreign intermediaries as import of services and may require a liability to pay under RCM on import.
Yeah,
Just take
true.
example of Booking.com Singapore. All this while, the hotels might have been taking the stand that the place of supply is Singapore, with that
Yes.
with the section in place. Today, that section is once it goes, the residuary clause makes the place of supply the place of that hotel. Recipient, I would say the recipient. So it will now start attracting an RCM. So I mean, this will also have to be seen from the angle of retrospective versus to prospective, because then if you make it retrospective, you are also opening up another Pandora's box of liability for these type of transactions. I'm not sure if the council has thought about this. We have made a representation saying that this should not have a negative impact on hotels, etc. But anyway, I just wanted to place this on record.
Yeah, Yatiji, a very valid point. A very valid point that if it is treated as retrospective, so whether it would have an impact of creating a fresh liability for say import of service. So in my opinion, now we have to see that if there are two limbs attached to it, one wherein it is treated as retrospective since beneficial in nature. The second is whether at the same time it can result and create a fresh liability. So the first, whenever it is beneficial nature, it has to be restricted only to the extent it is beneficial in nature. It cannot be assumed or treated to have, make a fresh liability being created which was not there. So the judgment which I discussed in case of say this pharmaceutical sector. In that case also, the retrospective benefit was only extended since it was beneficial. But by treating it as retrospective, a new liability is created. Then the other principles would come in that a retrospective amendment cannot result in a fresh liability being created if there was no such liability in the statute. So, in my opinion, if at all it is argued that it should be retrospective, it would only be having impact on the liability side if already created, and the benefit is to be given to the taxpayer.
Fair enough.
This provision will affect the import of services, sir. In our place in Tirupur, governments and all, they've got the agents abroad, sir, situated abroad. So we pay commission for them. Still now it was not taxed. But with this amendment, we have to pay on reverse charge.
Yes. Yes. Going forward, it has to be paid. But the question which Yatiji said that if it is argued that it should be retrospective, can it result in a fresh liability being created for persons who had not paid by treating this provision as in place?
All right. So, Arvindji, here I will again, as you are referring to the multiple decisions of various courts on this regard, so in the context of 96 Sub-Rule 10, so most notably that of HICAL Limited, I think it is very relevant, which again says that this can be retrospectively applied also, except for those actions where incoherent rights are completely done. That is, to put it very simply, all matters are done and dusted, completely closed matters. So apart from that, all other pending matters at whatever stage are there. So this would definitely have an impact. So this is one thing. But why I'm very or a little skeptical, not very, little skeptical as to why we can apply the ratio of HICAL Limited in this scenario is that there was even otherwise in 9610 unconstitutionality, which was, this one, which was also argued and which is also upheld. Whereas that is not the case here. There is no question of constitutionality. Again, Dharmendra Amjani 3 also has some bearing, as you rightly said. But there is, again, that is also something to be seen, whether the ratio of HICAL Limited can be completely applied. Here to say that it is retrospective. Because there was unconstitutionality, settled. It was settled. Whereas here it is not that much. Is one thing that probably...
In case of Dharmendra Amjani also, they have upheld the constitutional validity of 13.8. They have not held that it is unconstitutional. So therefore, I agree that 9610 and 13.8 to that extent stands on a different footing.
Exactly, that is what I'm trying to point out. Also, we'll have to keep it in account MRA, Material Recycling Association as well. So there's also there, if you remember, there is no direct this one bearing on the unconstitutionality of it. So therefore, on that sense, this again we'll have to look at it from that perspective also. We'll have to differentiate. Is what I think.
Yes. So this is also a relevant factor whenever we would be challenging a repeal that there is no saving clause attached to this 13(8)(b. Whether at all the constitutionality would have an impact on 13(8)(b) when we read it in context or in with reference to Rule 9610.
Otherwise, to a large extent, Hikal Limited can be argued here also.
Yes. So any
Sir,
other views on the member?
Sir, as far as I've read the agenda long back, I think they have specifically used the term that past liability will not be affected as such. So definitely they have said that it will be a prospective amendment. And also specifically they have used saying that past liabilities will not be affected by this amendment. And for import of services regarding this intermediary, they said that they are going to amend the Form 3B to specifically has to be considered for 3B and accordingly it has to be paid. So I think it will be considered as prospective amendment only, sir. So past liability will not be affected for exports or for import as such.
So we are on the part of past liability being created. I think that this would not be a retrospective amendment because whatever tax was paid as on the basis of that law which existed on that day. But for the liabilities which are already there for levying of C&S, of C&S. In that case, since the levy is there, but 13(8), whether we argue in respect of it being a clarificatory nature or there being a no saving clause. So to that extent, it can be argued that it is a beneficial amendment, and secondly, this omission is not having any repeal clause, any saving clause. So therefore, no fresh liability can be created. Only the matters which have been closed can only be treated to have been closed as per the provision which was prevalent at that time. So we have to see differently for the past liability being fresh created. Let's say in case of import of service, that in my opinion would not be there. But liability, if created on say levy of tax on local intermediaries for C&S, so in that case, we can always argue how far we would succeed because this is only a viewpoint which we are discussing in SMS, that this is a retrospective amendment and therefore no liability should be created for local agents who are acting as an intermediary for paying tax under C&S.
Okay. Sir, Dharmendra Jani pending, na sir, before court?
Yes, before Supreme Court.
Supreme Court. Okay.
Now, one small amendment which I would like to discuss for the remaining 5 minutes we have. Now, there is an amendment in Table 6.1 going forward in January 2026, wherein they would be allowing utilization of CGST and SGST ITC against IGST liability in whatever manner we want. So this is coming from the advisory which has been released that suggestive cross utilization of ITC from January 26 period onwards, once the available IGST ITC has been fully exhausted. The GST portal will allow to pay IGST liability in table 6.1 of 3B using available CGST and SGST in any sequence. So supposedly I have a say liability of IGST in 1 lakh rupees. I have a IGST ITC of say 50,000 rupees. I have a CGST ITC of say 30,000 rupees, and I have a IGST ITC of say 30,000 rupees. So total liability of IGST 1 lakh rupees and ITC available is 1 lakh 10,000. So what was happening as of now is that 50,000 from IGST used to be set off, IGST ITC, then 30,000 from CGST ITC used to be set off, and then 20,000 from SGST ITC used to be set up, and only 10,000 which was remaining in SGST only. Now what they have said that once you pay 50,000 from IGST ITC, you can use C&S in any manner whatever you want. So post this from January 2026, I would be allowed to use 25,000 from CGST and 25,000 from SGST, thereby leaving 5,000 in C&S separately, which supposedly helps me in saving on the interest in case of reversal of ITC, because the balance in both these ledger would be there. And prior to this January 26, I was asked to pay interest in CGST head because there was no liability in no ITC available in CGST. So this is the perspective of this amendment, but as we all say that section 49(5)(c), it provided ITC on account of state tax shall be utilized toward payment of IGST only where the balance of ITC on account of central tax is not available for payment of integrated tax. So this proviso is still there, and although the government has a power in 49(b) to suggest the order or the mechanism for utilization of ITC, which they have exercised in Rule 88A for utilization of IGST ITC. Now, this amendment is for IGST liability. It is not for IGST ITC. So, Rule 88A effectively is not applicable on this advisory. What they could have done is they could have exercised power under 49(b) and amended Rule 88A and provided the same. So, to this extent, I think that this utilization mechanism, which would be effective from January 2026, although beneficial to us, but it is going beyond the provisions of the law. So, any other views? Because these are the three issues which I think that these are substantial issues. And one more interesting issue which I would like to share is the memorandum explaining the provision of Finance Bill 2026, wherein it is said that unless otherwise specified, amendments carried out through the Finance Bill 2026 will come into effect from the date when the same will be notified concurrently as far as possible, with the corresponding amendments to the similar acts possessed by the states and union territories with legislature. So, going by the experience of central government, they have seen that the states are not moving in tandem with them. We have seen in the tribunals also that the appointment of state members is yet to take place, but the tribunals have been notified. The members have taken charge for the judicial members and the central technical members. And this the same thing happened in 16(5) CGST Act for the benefit of 16(4) being extended to 30th of November 2021. That the center notified it in October 2024, but many of the states, including Rajasthan, only notified in December 2024. So what was happening here is that the CGST was giving the benefit of both C and S in section 16(5), but SGST in Rajasthan was waiting for the amendment, and they only gave the benefit of 16(5) once they notified the amendment in December 2024. So now this is the three lines which I have read. They have come for the first time in Finance Bill. It was not there in any of the Finance Bill prior to this. And this is sort of an admission or acceptance by the central government that we would seek and wait for the states to come on board with us. But if they do not come, we will not wait and we will notify our amendments. So in future, there might be a position from say 1st October 2026. One amendment has been notified, but second has not been notified. By the CGST has been notified, but state GST has not been notified. So an officer issues a notice. What would happen to the validity of the demand? For CGST, it would be there, but can it be said that it would be there for SGST? So this is an interesting scenario which has been put by the memorandum explaining the provisions of Finance Bill 2026. So, any views of the House on this aspect? Yes, any of the members?
Sir, is it first time they have used this word, sir, as far as possible?
The three lines they have been used for the first time.
Okay. Okay.
Normally, what they say that they will notify it together, and that is also your understanding. But this, as far as possible, this is something strange which they have used.
Okay. So I think it's 10:1.
Yes,
Shall we
ma'am.
conclude?
Yes.
So again, with this, thank you, Arpit sir, for your valuable time to share your insights on this recent amendments, which is passed in the Finance Bill 2026. And we all are waiting for the amendments to be notified. And I thank you all the members also for interacting and making it quite interesting. And I think this, as far as possible, I have not read. which was a new insight for me to read together. But I'm still trying to understand why they specifically brought here.
Yes,
So
this is something we have to see that why they have used it and what would be
yes,
the impact of this.
yes, sir. Yes, sir. Thank you, sir. It was quite informative and useful session, sir. And
Thank
once
you
again,
all.
thank you all the members for joining this session. Thank you. Thank you.
Thank you. Thank you all. Thank you.
Thank you, sir.
Thank
sir.
you. Thank you, sir.
Arpita.
Arpita, thank you, sir.
Annapurna.
Thank you, sir.